Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is March 13th, and we have Brent crude oil trading a little down this morning, ever so slightly, but after a significant jump yesterday with Brent trading back above $70 a barrel, as a 2% increase yesterday, which gave a sort of a challenge to the thesis that Brent might be stuck below $70 a barrel. Let's kick off this morning with Paul Hicken, Chief Economist and Editor-in-Chief of Petroleum Economist. Paul, your thoughts on the market dynamics at the moment, the idea that the backwardation that's still solidly in the market and growing above $1 over the 4-month spread. As long as that backwardation is there, do you think OPEC Plus is safe to continue to add new supply back to the market?
That's a great question, Sean, and thanks for having me back on. I wouldn't say safe, but I think there's certainly evidence to continue with the gradual release of barrels back to the market from OPEC Plus. You would say that the market is still very bearish, especially on the demand side. If you break it down into, I'll break it down to about three parts. Which first, on the demand side, still a lot of negativity around. We've talked about tariffs till that we're blue in the face. But what I would say is, uncertainty, the uncertainty of tariffs, not just the sort of inflationary cost, but the uncertainty of tariffs, the sort of difficulty to do business and for business to plan and go forward, not just in the US, but elsewhere. It's going to paralyze the market, paralyze industry, and that's the biggest problem that weighs on sentiment and demand. It's not actually really played into demand so much, but it's that sentiment that's it keeps going on like that. And I think that's the one that's weighing on the bearishness. And you look at sort of people talking about, stagflation I've seen that been talked about a little bit again in the US, and you never like to hear those words being bounded about again. And you look at China as well, and while they're throwing the kitchen sink at trying to revive their economy, well, it's not too bad, but that sort of this sort of dysfunctional property problem. It's been there for a long time. It's very hard to reinflate your economy in those situations. So they're playing really on the demand thing. But at the same time, what you've got to say is, while OPEC is bringing back a very gradual amount of barrels, does the market really want to push the prices too much lower, knowing that OPEC could reverse at any time? It's done it before. It could do it again quite quickly, even before April. So I think that's still playing in the back of the market's mind. That floor that OPEC has sort of provided the market is still there, very tenuously, but it's still there. And I think that's still an important fact to remember. And then you've got the question about the supply side, and I think it was quite worrying on the supply side from an OPEC Plus perspective when you see so much more barrels coming to the market in February, which we saw from the Petroleum Economist survey, from the OPEC monthly report that came out yesterday. So there's those worrying sides, and then you've got the question about how much supply is going to come from elsewhere, the non-OPEC supply. And I think that while the market is still thinking that non-OPEC supply is going to be strong, US, Canada, Brazil, it's been talked about quite regularly, and Norway, I think that narrative is still not guaranteed. I think you could see US, Norway, Brazil all underperform this year in terms of non-OPEC supply. So I think we're still in that sort of mode where the
A
market
lot of
can wait and see.
unknowns there. The ultimate balance of plus or minus is there. Jamal Qureshi, Managing Director, Analysis and Strategy at Petrologistics. It seemed yesterday, Jamal, the good old-fashioned sort of weekly inventory report came in to give the market a big boost, a much greater draw on US gasoline inventories than was expected. Your thoughts on just sort of those fundamentals? We talked about backwardation in the market there with Paul, now gasoline inventories and the weekly inventory reports, how they are influencing the direction of travel here. Your thoughts on that development yesterday?
Yeah, well, I mean, I think right now we've got sitting across everything, the biggest risks out there really are geopolitical. That sits on top of everything. If we look at a price that's standing there at a $70-ish floor, is essentially what we've established. That is an incredibly powerful technical
Floor or
floor.
ceiling? I mean, it's
Well, it's a incredibly powerful technical support, right? That's a very, very important level, right? If it breaks down, obviously that becomes very, very bearish. But the fact that it's sitting there, right, even in the face of backwardation, to me says we've got a fundamentally soft market here. And fine, we've got the OPEC situation. I think it's important to keep in mind that we have one country in OPEC plus that is fully compliant, minus a couple of the really small ones, and that is Saudi Arabia. Everybody else is at best partially compliant. And now we're talking about increasing supply at a time where the market keeps wanting to push down to that technical support level. That to me says we've got a real issue there with the basic balance. There's clearly countries that are putting out more supply than is recognized by the market. Products balances really are now at the mercy sort of macroeconomic, headwinds we've got. Fine, China's questionable. The US, I mean, this administration is throwing so many policies out that are demand dangerous. It's hard to imagine they're going to come out of that smoothly. At best, you're going to be sitting there with a brief recession, potentially worse. So, any strength you get temporarily from stocks, I wouldn't put much weight in that at present. So there's too many risks. There are obviously supply shock risks. Iran is a particular one that, things could happen more sort of on Middle Eastern geopolitics. We have potentially the Gaza situation heating up things with the Yemenis and the Houthis, the Red Sea passages. But you take all this, it's all against the background of a fundamentally soft market.
Dr. Aldo Flores Quiroga, a former Deputy Secretary at Mexico's Ministry of Energy and currently non-resident fellow at the Baker Institute. Dr. Aldo, Jamal mentioned there sort of the demand scary, threatening policies of the Trump administration, and obviously that's sort of summed up in a big tariff bonanza. But what does that mean? What is that looking like? Obviously, Mexico and Canada has been in the crosshairs from day one over the last 2 months. What does that potentially? How does that stack up to threaten supply out of the sanctioned Mexico and Canada? I think you're on mute. I know Donald Trump wants you on mute, but
Sorry.
I do not.
I
I
was
do
listening.
not.
I was
I
listening.
want to. I want to hear every word you have to say.
Sorry, there you go. It's a tariff on my talking.
Exactly.
Um,
There's
I was
even
listening.
well, that's what the poor young fella in New York is experiencing at the moment. There's a tariff
I was
on
listening to
everything.
Paul and Jamal and all the uncertainties that they've mentioned,
Mm.
and I cannot agree more. And clearly, this trade war that briefly seemed to spill into an energy war with the Ontario export tax on electricity is not good for anyone, and it's generating significant uncertainty. That the talk on this side of the Atlantic on investments that are being delayed because of this uncertainty of companies considering whether to, in my view, prematurely considering whether to relocate or not to the US, because we have to yet to see how this tariff or trade war plays out. All of these things are generating an uncertainty. There's no clear direction for where to move, and I think this will be definitely having an impact on the pace of economic growth, certainly in Mexico, but I think in North America. And we
In
should.
Mexico, Aldo, is there a sense at all that the worst is over? The boy has cried wolf a few times, and the bite isn't quite the bark, or
Well, let's say that Mexico has been spared so far after a number of scares. I mean, because the action has moved between the US and Canada. But the real test will come in April. We'll see. That's when President Trump announced that he would impose reciprocal tariffs on every country. And Mexico has no tariffs on US imports, basically, because of the USMCA, even though not all products comply with the North American rules of origin and the like. So you have some goods that are already paying whatever tariff is in the US. This is fairly free trade already happening. And so if that logic prevails, then nothing should happen next. And at least in what concerns Mexico and the US, should be business as usual. But I still don't dare to say or to affirm that that will be the scenario. I mean, we're seeing policy announcements every day. Many of them are contradicting each other. So we have at least 2 more weeks of more uncertainty and more surprises before we can determine where this might go.
Paul, the aspect of the energy flows, obviously we have the Trump drama. Will he sanction everybody? Obviously we've got that, but in terms of the oil, maximum pressure on Iran was recommitted to in the last few days at CERAWeek by the new U.S. Energy Secretary. We still, though, however, have Russian oil reports that India is still importing lots of Russian oil after a brief dip in the recent months, but back to sort of big imports there based on since the over the period of the Ukraine war, India has become a big importer of Russian oil. In terms of flows, where flows are moving, your thoughts on those changing or shifting with these geopolitical uncertainties?
Yeah, so on the Iran one, well, that's flows changing would actually be potentially flow stopping for
Yeah.
Iran. I don't think it's. I think Iran's exhausted all since 90% of Iranian crude goes to China. There's not anywhere else it can go if it doesn't go there, and that's a big question. Certainly, if Trump wants to put maximum pressure and he actually does go through with it, it is going to take a significant amount of barrels off the table for a while. For how long, it's difficult to say because, we've talked about before, sanctions are difficult to implement in any fully entirety and get around it. There's many ways or workarounds. It's very difficult to
Although
say.
it does seem that in the last few months, even obviously initiated pre-Trump, but that, and again, we were talking before we came on about IE Week, the Dark Fleet and all of its shenanigans has seemed to be a real target from the final days of Biden and had a somewhat of an impact on the movement as compared to previous, although Iran is a little bit outside of that.
Yeah, it's true. I mean, it's certainly it has had more of an impact. You start sanctioning ports, but even then, you can find workarounds. There are sort of lots of different, ways to get around it. It just makes it slower. That's why I think no one's really saying the maximum pressure will take off all of the Iranian barrels. It's probably going to be somewhere, you see the sort of 500,000 barrel. It seems like an analyst fudge, really. It's just sort of just general area where, and how long that's going to be in place before either further sanctions come to sort of squeeze it further, or as they see the barrels coming, still going to China. So I think. But I think, and that's why really you haven't seen prices rise too much higher because, if that was really, if the market really believed 500,000 barrels or more was to come off the market, that would surely be quite bullish for the oil price. And so the market's still wait and see on that. In terms of Russia flows, well, that's more of a reordering. I think, you don't really, you didn't really see barrels come off the market back 3 years ago when, not to do a history lesson, but 3 years ago, when it first happened and prices jumped from up to $130 a barrel, but fairly quickly came back down to sort of normal levels when you realize that actually flows didn't come off off the market. It just went cheaper to India, which, you know, went from 0 to 2 million barrels a day. So, you're right, Sean, in a sense. How much India gets affected will be key because they're the ones that have been taking, them and China are the ones been taking all those Russian barrels. So, you know, if that could still have a slight impact, and particularly on price and the sort of reordering of flows.
Jamal, just picking up on that, I mean, in terms of the new supply, the idea that, you know, as you said in your opening comments there, the natural order of this market is bearish. It's drifting down to that $70 sort of handle not moving whether up or down too far away from it. The new supply that could come to market this year was always seen to be coming from the non-OPEC plus countries, although the OPEC plus are the ones now announcing to bring back, and we have the cheating, and we have Brent stuck at 70. How is that likely to impact the non-OPEC plus countries? Obviously, you're in Norway, a big non-OPEC plus country, the US, where, you know, the infamous drill baby drill. And then we see this week at CERAWeek in Houston, all of the big oil company executives, you know, singing the praises of the Trump policies and so on, but none of them appears to be willing to put too much money in the ground. What are your thoughts on the outlook for non-OPEC plus supply now that OPEC plus has made this decision and prices are sort of staying stuck around 70?
Yeah. Uh, I don't see a lot of natural potential there for this year. Obviously, in the shale patch, you know, it's still all about delivering returns for investors at this point. The capital discipline it's the same story we've had for a long time, right? It's still solid. So I'm not expecting anything significant there. In fact, it's fully possible, you know, out of the US, we could be seeing a leveling out. If you don't mind, though, I'd like to just circle back a little bit to the sanctions because, you know,
Yeah.
we have been keeping a very close eye on the impact that that's had. And if we look at
Which
Russia,
sanctions now? The Russian ones?
well, if we can talk about both of them, but
Okay.
the
Yeah,
Russian
okay.
ones, the Russian ones have been very, very interesting simply because, right, the question was there was a clear impact at first, you know, hitting very specific tankers, hitting two very specific companies. You know, it was really focusing a lot on the Far Eastern barrels and some of the Arctic barrels. And what did we see? We saw there was a short-term impact and things have corrected. They're moving again. Espo in particular was hit. And yet
But isn't
that's
that moving because prices of the Russian euros have dropped into the sweet spot of not violating the price cap of $60?
No, I mean, that has an impact. But the key issue we've seen how those barrels have shuffled around. Surgutneftegas, Gazprom Neft, they were hit. Their barrels came down. But what happened? The Druzhba, the whole internal pipeline network within Russia, you're able to shuffle the barrels around. So more of it went to domestic refineries on the sanctioned companies. And then companies pop up, you know, little new ones pop up, are able to move barrels. The existing larger companies, all of a sudden, they start moving extra barrels because they've been shuffled around. And now we're seeing the Indians tentatively starting to come back and pick up some of those. They've even picked up some SOCOL, which they haven't really done before. They went immediately and got more Gulf barrels to try to hedge their risks, but they're getting the Russian back again. Now, on Iran, I mean, we saw there was a small impact. Some of the floating storage went up a bit. Some of the volumes came down a bit on the export side, but at the same time, it didn't even dip to the 2024 lows. And we're starting to see a rebound as well. And it's the same game, right? The Chinese state-owned refiners, they're out of the game, right? So they've been out of it. They're not the ones you can hit. It's all the teapots. And obviously, there's going to be attempts at hitting things there. We saw the Shandong port, you know, restricting things, but already barrels are moving back in there by playing with the rules. And hitting second tier, third tier companies is going to be very, very difficult because all of a sudden a new shadow bank pops up in rural China. All these games can be played and it's difficult. We hear now this talk of possibly, you know, inspecting ships, especially in sort of Southeast Asia to try to block things. That would be a step up, you'd see. But if it's just this cat and mouse sanctions game, the odds are it's not going to have a significant effect in the medium term.
Aldo, just coming back to your neighborhood, we saw obviously the Trump administration killing the Chevron license to drill and export crude out of Venezuela. And that had sort of just been reinstated by Biden over the last year or so. And we had the CEO of Chevron on CERAWeek this week sort of saying, moaning a bit about that, obviously, but mostly it would appear moaning about the uncertain and continuously changing policies. Where do you think that leaves the investment into Latin America for new exploration? Guyana has been a big winner in recent years. Your thoughts on this sort of flip-flopping on policy and its impact, sanctions, not sanctions, tariffs, not tariffs?
What a question. I think, well, first of all, this is very targeted to Venezuela. We'll have to see how the reciprocal tariffs end up targeting, say, Brazil. I don't know how this would play out with Guyana.
I mean, when you look at the reasons why Trump gave, it was because that the Venezuelans wouldn't take back their illegal migrants from the US. I don't know if there's illegal migrants from Guyana living in Manhattan, but it seems very sort of speculative as to what might be the reason.
But it's a great point you're making, because you're reminding us that we are seeing these actions, these trade or investment related actions, linked or based on non-trade, non-investment, non-energy issues. So it has been the drug trade and migration that have been used as justifications. And to me, this is very interesting, because we have been seeing over the last decades an upward trend in the use of economic sanctions, of which energy sanctions are a subset. And we've spoken so far of the Russian sanctions, of the Iranian sanctions, of the Venezuelan sanctions. But now I wonder if we might be talking of tariffs, energy tariffs as sanctions as well, because that's what's motivating them. So now Canada has a 10% tariff on its energy exports. Canada, well, we discussed, Ontario threatened to have this additional tariff. So we might be entering a world of sanctions and tariffs on energy in pursuit of other non-energy related goals. This only adds uncertainty to this to the whole environment. I think we'll be there for quite a while until some of this clears out. But I don't see, I mean, it's very difficult to see right now when will this be changing or the uncertainty.
Where there's some clarity emerging, and that is, it's in some ways it's kind of amazing that Brent and oil prices are holding at $70 a barrel. Let's go to the survey question and get sort of the view on this. OPEC Plus is likely to continue with supply increases beyond April as long as oil markets remain in backwardation. Agree or disagree? The question, obviously, about new supply and OPEC Plus policy has only been, I mean, committed for April. The plan is beyond that, but the commitment is to be sort of reaffirmed every month. So the question is beyond there, where that goes. Paul, sorry, Aldo?
Yeah, Sean, I was going to say that, by the way, Mexico is over complying with its OPEC Plus commitments.
Unfortunately, you're saying.
This production has been falling a little bit faster than expected. So anyway.
It
that
has, and I think when you look across the 20 countries, which countries can actually, how many countries within that group are struggling to even meet their quotas, never mind violate them, and wish they could violate them, but they don't have the capital. I mean, Nigeria were stuck in that place for a long time. Paul, one thing that we don't talk about, despite the dramas of the backdrop, obviously all the news this week or the last recent period has been about the idea of a ceasefire in Russia, and we've got a ceasefire in the Middle East, and the sense of a geopolitical risk premium. We've got sort of tariff premium risk and impact on the markets, but the geopolitical risk premium, the supply disruption premium, that it doesn't seem to be inflating this market, even though we're seeing in recent days, and sometimes it's often the case that the last sort of darkness before the new dawn, massive drone attacks by the Ukrainians into Russian energy refineries and other infrastructure and so forth. So I just wanted to get your thoughts on where you think that's at. The threats are all gone. They're still there. Your thoughts?
Yeah, that's a good point, Sean, because it seems that Trump and tariffs and sanctions seem to have dominated completely everyone's thinking, everyone's thoughts, and that's why it's always very interesting when you mention non-OPEC supply or risk premium, which was the theme of 2024. I don't think you're going to bring that back into fashion. I'm afraid for a while. Thankfully, in a way, but
yeah, certainly. That's not one thing you want to bring back into fashion.
Actually, but what I want to mention just a little bit on that survey as well is actually, which we haven't talked about, is the reasons for OPEC gradually bringing back barrels, and I think that's also important because what I would say is it could well be that this is Saudi Arabia doing a market share strategy by stealth. And we saw in 2020 when it got upset with non-compliance and flooded the market. 2014 obviously was the big one that brought OPEC Plus together. But maybe it's a more sophisticated strategy. It doesn't want to flood the market at this point in terms of but I think that risk and threat is there. And I think by saying that we're going to start bringing back barrels, Saudi Arabia, because as Jamal and Aldo mentioned, probably they're the only ones really doing a full compliance, and they're carrying a lot of the burden. And at some point, they're probably saying to the market and to other non-OPEC Plus, this is not acceptable, and that's the way to. If you get compliance in line, only then do you start sort of being on top of managing that market again, which is actually, effectively more bullish if that starts to happen, because that isn't happening. We've seen it with, you talked about Kazakhstan and others.
Well, now Iraq are bringing back 400,000 barrel out of Kurdistan.
It's a real problem, and I think the market share strategy has to be being back into the psyche of other members in the market.
Jamal, speaking of the geopolitics, we're waiting for Godot today, with the Ukrainians agreeing earlier this week to a 30-day ceasefire. We're waiting for Putin's response on that, and that could be quite a sort of earth-shattering announcement if indeed it comes with any clarity as to where the direction of travel goes in Ukraine and how quickly these things can move or not. Your thoughts on the outlook for that and what that could mean for energy flows into Europe from Russia?
Yeah. Well, and we've seen the administration in Washington as well talking about easing sanctions in a way that the EU is, generally speaking, not nearly as comfortable with. There's a few countries, obviously, within the EU that would welcome it, and Germany's sort of teasing the possibility that they might want to take advantage of it a little bit more, along with places like Hungary that naturally would do so. I would suspect that the crude would flow sooner. Now, that's an interesting dynamic in that if the US tariffs Mexican and Canadian energy, not a lot of Urals tended to flow to the US, but maybe there'll be more than there had been in the past as a result of that. It's a little bit hard to say. Obviously, Trump has pushed very hard to, try to bring the Ukrainians to heel. in this case, and flipped U.S. policy. But there's the uncertainty that comes out of Washington. We need to remember comes from the fact that we look at this oftentimes and say this is a very right-wing government, but it's a totally diverse group of all sorts of different right-wing factions. So because of that, you get this chaos and this constant flip-flop. And Trump has a few principles he likes. I mean, he likes tariffs, generically speaking. He wants to bring the Ukrainians, kind of force them. But he likes being the master of chaos, which means we're going to continue to see unexpected moves. So would you see some energy flowing again to the Atlantic Basin from Russia if he does bring this about? Yeah, you'll see some. I don't imagine it's going to be a sudden gigantic flood of all Russian energy, though.
I mean, in all this master of chaos stuff, you'd have to say, at least from the oil market's point of view, we've been fairly agnostic, very, sort of nonchalant about it all. I mean, a little bit here, a little bit there, nothing like the drama of the financial markets. Aldo, I wanted to get your thoughts and get your sort of sense from the ground there about, what you can tell us. I mean, I saw my poor little Irish Prime Minister in the White House yesterday, the latest to sit in the big yellow chair and get the naughty finger because Ireland happens to be too successful in attracting American companies. But the question is ultimately, how does one respond to this? And the response of everything is quite important to Trump. We saw Zelensky last week respond in a fairly defiant way, and he got a big beating. We're seeing Canada. I mean, this is an existential kind of moment, it seems, in Canada. Like you see it most viscerally on the ice hockey rink. They're literally taking off the gloves and having a big old scrap fighting between American and Canadian ice hockey players. And the national mood in Canada is incredibly patriotic. And they're defiant in their response to Trump's tariffs and threats to their sovereignty. Mexico seems to be a little sotto voce. We're seeing China say, a little bit here, a little bit there, not so much dramas. How's Mexico handling this? Is there a blueprint for the successful way that others might follow?
I don't know. What does seem to be the case is that
Mexico's used to being slapped around by the Americans, maybe in a way that
no,
the Canadians are not.
The Mexican president has been very prudent and very much backing her. I mean, the complaints have been focused on migration and drugs, and the Mexican government has been acting on that front, delivering results. And I think that is creating the space for this conversation to be longer, and to be extended. I mean, what definitely is much more surprising is the situation with Canada. It's I have a very hard time understanding why the conflict with Canada has escalated to that level. It really makes no sense given the history of that alliance and friendship between the two countries. With Mexico, it's a more checkered history, but I think that again, Mexico is going through the motions. That has been helping. Not to say that Canada is not going through the motions, but the approach of the Mexican president has been more.
Well, it is interesting about the strategy of, the defiance, or do you meet fire with fire, or you sort of take it on a chin and you react in other ways. And I think that's sort of an interesting.
Let me bring up Ontario for the third time in this conversation.
Yeah. The new hero of the world, the governor of Ontario.
Well, yes. I mean, it seems to me.
Didn't even know Ontario had a governor. So now these are the new things you learn.
Now it's a premier, right?
Yeah, so premier rather, sorry.
It almost appears that he was rewarded by his escalation because, first of all, not only did he back down, but President Trump backed down on his comments, actually praising the premier in a way. And then he gets invited to Washington to talk about the future of the USMCA and other things, or at least that what the press report says. Well, it means that his actions did have an effect.
And he has some pretty strong cards. He can turn off the electricity to three states in the US. That's quite a powerful tool in your hand.
So maybe see that it's both extremes that work, right?
Yeah.
Now, but one last comment. Speaking of Zelensky, it's not like he has been the only one, right? A week before, President Macron also corrected Trump in public, and there was no reprimand inside the White House when they were together, right? So there's more variables there, but so far, yes, it seems that
it's hard to see where being weak and being sort of genuflecting to the Trump demand is a winning strategy. It might be a winner in the 5 seconds that you do it, but it doesn't seem to have a long-standing success to the strategy. And the Ontario Premier's one does seem to be more. Agree here, big overwhelming agree that OPEC likely continue. We've overstayed our welcome in the homes of Aldo Flores Quiroga, Paul Hicken, and Jamal Qureshi. Thank you so much. Have a great day, everybody. As we said, Brent holding above $70 a barrel today after the big jump yesterday. Let's see how that holds for the rest of the week. All the best, guys. See you all soon. Thank you very much.
Thank you very much.
Ramadan Kareem. All the best.
Ramadan Kareem.